Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Joyce, Managing Director on Nasdaq's Market Intelligence Desk, for an update to watch in the Nasdaq-100. Brian, it's been quite the week of trade for us.
Sure.
And before we even get into levels with the Nasdaq-100, let's have a conversation what's happening from a more macro perspective, because it's really what's happening with the curve and with rates and the banks.
Yeah, the banks and financials, the big news over this past week. We touched on it a little bit last Thursday, but it was really Friday and over the weekend where we learned there was a total of 3 bank failures here. So there's, the regulator stepped in, guaranteed the deposits at the 3 failed banks. They created 2 new, they relaxed the rules at the discount window, and then they created a new lending facility for banks to post collateral towards. So, there's just been a lot of chain reactions, coming from that. I was expecting Monday that maybe we'd see a rebound in some of these names in the banks, and Monday was a deep down day, and that was when the low was made, but it was one of the worst 3-day decline for the KRX index.
This has really been an interesting decade, the 2020s to start. We start with COVID, then we have the war in Ukraine, then we're managing all the different disruptions in supply chain.
Sure.
Seeing what's happening with rates, the velocity of the move in rates, and 100 basis points in the span of a week is it's kind of hard to wrap your head around that. So let's take a look at that side of the story first.
Yeah. So
looking at the curve, looking at rates.
Yeah. So the curve, actually, the Fed funds rates curve is really, was just phenomenal moves there. So the blue curve right here is just from last Wednesday, which is kind of the high we've seen this cycle in the Fed funds rate curve, and just this week in 5 or 6 sessions, it's fallen. In some parts of the curve, I think November at the low this week was down 196 basis points just from last Wednesday. So a phenomenal move down to the downside. And so the MOVE index, which is the VIX for the rates market, that currently today is at its highest level since December 2008. We've seen a big pullback in the 2-year U.S. Treasury yield, and so that's holding right now for the 4th straight session on its 200-day moving average. So that's some temporary support there, but you can see it's kind of consolidating along that level, and it coincides with some lows we've seen going back to October and here again in January, beginning and late of January. So if that 2-year is to kind of, that support gives way and we see a stronger move to the downside, then you would see a further spike in the 10s-2s spread, which is a good barometer of economic activity. We've been inverted for quite some time. Recently, minus 108 basis points, so the deepest we've seen since the early 1980s. And typically, when you're going into a recession, you see that that spread start to re-invert itself, re-steepen, I should say. And so, we started to make that move. It's the biggest move we've had during this flattening move over the last 12 plus months. And so we'll have to wait and see if this is just the worst of it, and we're going to start to flatten again, or if this curve is going to, or this spread I should say, is going to continue to steep higher. And if so, that would likely be driven by the short end of the curve, which would likely be on concern of what's going on in the marketplace.
Well, let's take a look at fresh technical levels to watch in the Nasdaq-100, because it certainly has outperformed in March. And if we take a look at it now, it's up nearly 2.5% relative to the Dow Jones, only up 1%. So it kind of tells you what the growth story looks like.
Yeah, the Dow is, I think, still down on the year. The NDX is the top performer. So with the, the easing of rates, I think that's been beneficial to a lot of the tech names, the growth stocks. And we were highlighting last week, even given the concerns that we were seeing in the marketplace last Thursday, I was saying I did kind of, like how we were pulling back into some technical support for the NDX around that 50 and 100-day moving average. I was getting a little worried on Monday when we started to break below it, but we've kind of, we held it for, if it went below for just one session, and we came right back above it, and then we're now moving up 2.5% today, as you noted. And as you can see, we've had the breakout now from this declining channel in place over the last 5 weeks. If we look at the weekly period chart, I like this bullish engulfing candlestick pattern. It's pretty large in size. It's almost 6% this week, so that's very constructive. And we'll just wait to see right now. So up about 3% from here, maybe a little bit less is the Feb high, and another 9% from there is the August high. So to me, what I can see here is we have this double bottom pattern that had been forming from the October and January lows, and having held that support this week on that 200-day average, now to Golden Cross, coincides with the middle of the double bottom pattern. I just want to see us get it back above that Feb high, and I have more confidence that that is a real bottoming formation, and that the move ahead is to the upside.
Yeah, well, I mean, we have another week of potential volatile events as well. We have a triple witch on Friday, then we have the Fed, of course, so there is still more to come from a macro perspective for the month of March.
Yeah, so we use the technicals as our guide and to try to identify risk-reward levels and to try to identify what's outperforming and then maybe come up with the reasons why, whether they're macro, whether they're fundamental. The technicals can certainly change on a dime if the story changes out there in the marketplace.
All right. Appreciate the insight as always, Brian. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.